Bitcoin just smashed through a new all-time high $111,000 per coin. Bulls are celebrating, bears are scrambling, and the media is in total shock. But here on FiVerge, we dig deeper. What's really driving this historic rally, and what does it mean for your money? Today, I'm breaking down the 5 critical forces behind Bitcoin's explosive move. Let's dive in. First up, the halving squeeze. Every 4 years, Bitcoin's code cuts the new supply in half, permanently. This built-in scarcity means fewer coins for miners to sell, while demand keeps rising. With each halving, the daily supply shrinks, but interest from investors only grows. It's simple economics. Less supply, more demand, higher prices. This isn't a one-time event. It's a recurring catalyst for every major bull run. The latest halving has supercharged the current rally. Next, Wall Street's Bitcoin ETF vacuum. Spot Bitcoin ETFs have made it easier than ever for institutions and everyday investors to buy in. Giants like BlackRock and Fidelity are now snapping up Bitcoin to back their ETFs, creating massive, relentless demand. Billions are flowing in, and these ETFs are vacuuming up available supply. Combine this with the halving, and you get a perfect storm demand shock meets supply shock. This is a tidal wave of new capital, not just a ripple. Third, the Michael Saylor effect. MicroStrategy's CEO made headlines by converting company cash into Bitcoin, inspiring other corporations to follow. Now more companies are adding Bitcoin to their balance sheets, not as a gamble, but as a long-term strategy. Even a small shift, just 1% of global corporate treasuries, means huge new demand. This isn't just retail or ETF buying, it's deep-pocketed long-term capital. Corporate adoption is normalizing Bitcoin as a legitimate treasury asset. Fourth, policy tailwinds. Regulatory uncertainty once scared big money away, but that's changing fast. The approval of Bitcoin ETFs in the US and similar moves worldwide signal growing acceptance. Clearer rules mean less risk for institutions, unlocking new waves of investment. Governments are moving from hostility to engagement, legitimizing Bitcoin globally. Regulation is now a tailwind, not a headwind. Finally, the gold gap. Gold's market cap is $15 trillion. Bitcoin's is just a fraction of that, even at these highs. Bitcoin is digital gold, scarcer, more portable, and increasingly trusted as a store of value. If Bitcoin captures even a slice of gold's market, the upside is massive. Imagine Bitcoin reaching half of gold's market cap. The price would skyrocket. This is a long-term thesis, but the potential is enormous. The gold gap shows just how much room Bitcoin has to grow. Those are the 5 forces driving Bitcoin's new era. But remember, big gains come with big volatility. 30% drops are normal in crypto. Manage your risk, use secure wallets, and never invest more than you can afford to lose. Watch ETF inflows, miner reserves, and on-chain activity for clues on momentum. Stay alert for signs of overheating, like rising leverage. For daily hype-free updates, subscribe and join our FiVerge community. Drop your BTC price target in the comments and stay invested in your future.